Hello, and welcome to the Traders in the Know channel. Be sure to hit the like button and subscribe. Leave comments below. As you can see from the thumbnail intro, it's a look at whether Trump blinked and the impact on financial markets. U.S. stocks soared on Wednesday after President Trump announced a 90-day pause on certain tariffs. For most countries, easing tensions in the ongoing trade war. The Nasdaq jumped 12%, its best day in 24 years, while the S&P 500 rose 9.5% and the Dow gained 9%, marking its largest point increase ever at 2,963. The rally began shortly after Trump posted on Truth Social that over 75 countries had agreed not to retaliate, prompting him to temporarily lower tariffs to 10%. However, tariffs on Chinese imports were sharply increased to 125%, effective immediately. In response, China raised its own tariffs on U.S. goods to 84%. Despite the rebound, concerns lingered. Yields on 10-year U.S. Treasuries rose to 4.47% before easing to 4.41% following strong demand in an auction. The yield has risen 0.42 percentage points in 3 days amid global market jitters. Japanese and European stocks fell sharply earlier in the day. President Trump and Treasury Secretary Scott Bessent reassured bankers about the U.S. economy, though J.P. Morgan CEO Jamie Dimon warned a recession may be ahead. Futures markets showed only modest gains Wednesday night. The tariffs wars have escalated until both America and China claim they will not back down. Trump particularly said there will be no pause on tariffs. Now, how do we get to this exact tipping point? Trump raised extra tariff on all countries that had retaliated against initial U.S. tariffs, but singled out China for daring to go toe-to-toe, matching Trump's own level of retaliatory tariffs. So here we are.
I've heard overnight is more concerns about the bond market. The bond prices are dropping. I was excited to talk to you because I know you can explain in ways that silly people like me can understand why that's important and so concerning.
Well, first of all, I just want to say to all listeners, the simple questions are always the best questions. It's an interesting thing. Usually when you see a kind of a stock market rout like what we're seeing now, you would see safety assets, things that people feel are more secure, like bonds, particularly short-term bonds, short-term U.S. treasuries, gold even. Things like that should be rising, but actually in recent days they've been falling. So why is that? Two things to think about. One is that a lot of players in the market, particularly big institutional players, hedge funds, the professional guys, are actually selling the good stuff, meaning, the safe bonds, the gold, in order to cover the losses that they're having in other places in their portfolio. That's something that worries me because that's the type of behavior that you see when there are more losses to come. It means there's blood on the floor somewhere. There are big places where there's debt that may be covered and we don't know where it is. And that just means that there's a lot of risk in the market still. Point number one. Point number two is that even before this trade war, bonds were telling us, the bond market was telling us, we're nervous about the U.S. economy. We're nervous about the world. We know that there's a kind of a paradigm shift coming, and they were reflecting that. Yields were going up, which means you get paid more for taking the risk, but prices were going down. And that says the bond market was already thinking, even before the trade war, gosh, I'm worried about the U.S. economy. Yeah,
it's a scary cocktail, the likes of which you see during COVID. Or something. I mean, we haven't seen something like we're seeing overnight since COVID, which is why I think people are waking up going, whoa, this is getting even more tenuous. Again, back to the first question, you were talking about goods. Rhonda, do you have a sense of where people will see this first? I'm going to go to the store and the price for this is what's going to be higher most quickly.
Yeah, for sure. You'll see it first in perishables, in food and agricultural products, things that would need to be imported on kind of a day-by-day basis, and then you would see the price hit quickly. The things that will take longer will be, complex products, things like cars, things like certain kinds of white goods, computer products, where the retailers and the manufacturers might have a lot of parts that are already in stock, and so it could take weeks or months for them to need to import more.
If we listen to the CNN news anchor, she explains the American public will suffer the most, that China will simply wait out. Leave your comments down below if you agree. And there you have it. I hope this video was helpful. Give a thumbs up and hit the notification bell for future videos. Don't forget to leave your comments below. And remember our motto, whether in business or finance, protect yourself at all times.